Hey traders, Raghee here, and in this update we're going to talk about the two scenarios that we are looking at in this market, and this should clarify a lot about what our next move is going to be. And this is really what is going to be discussed in the webinar coming up tomorrow at 8 p.m. and even in the class that we have coming up on the 16th of this month, and that is, how do we trade this environment? And are the strategies that I trade to this environment that different than what I would do in a trend? And the truth of the matter is, same tools, just adapting to the market trend that we're dealing with now. And that's going to be the topic of this video. What is the market trend that we're dealing with now? And when we take a look at the S&P and the NASDAQ, and even quite frankly, the Dow, the market trend that we're dealing with right now is actually a transitional market. And you might say, wait a minute, Rag, I've heard you talk about markup, markdown, accumulation, distribution. I know that you're a fan of Dow theory. That's your expertise. I don't remember transitional markets in one of those four market trends. And you're right. Transitional markets are this very brief period of time. It's usually maybe a week or two, max, usually, where we're not quite in one of those four categories. We're in flux. And in this environment, it's ridiculously difficult to pinpoint what strategy is going to work best. In other words, do we fade lows and buy those? That's actually been working pretty well, fading the lows. Do we short the rips? So when we get to a certain resistance level, do we short? And we could say, you know what, that's actually worked too. And that's what transitional markets do. They are working for different types of strategies. So this would be a buy in here, this would be a buy in here, and as we get to the midpoint of this high to low range, right? This is your low in here, that's your high in here. The midpoint of that range is about where the fatigue kicks in. So ultimately what we can do is, well, think about doing both. What we don't want to do, right? If we know that success can be found in a number of ways, but failure is usually one or two things that we do, let's figure out what we don't want to do. We don't want to be buying here. We don't want to be shorting here. Pretty much anything else, you've got a pretty good shot. So don't buy here, don't short at the bottom of the range. Focus on the bottom of the range, meaning this area, for buys, and focus on this area for shorts. And even getting up into this area, potentially, for shorts. And this is really a fade market. What is fade? In this transitional market, and even if this transition just settles into distribution, which is what I think ultimately we're going to do. Do I think we're going to correct 10%, 20%? Look, in some instances, in some names, in some corners of the market, we've already corrected 10%. The indices have exceeded just over 5, but not quite 10. So do I think we're heading towards a 20%? One step at a time. So if we're ultimately going to settle into distribution, and this is a market environment you're probably already aware of. This is a transition that already happened earlier this year in the Russell. Here's your red grab candle beginning the transition. Here's your official transition. And what that means is, as we move forward, this is your low, this was your high, and then look how we've just been moving back and forth in that range. I don't think we'll have this prolonged a period of distribution in the Dow, NASDAQ, S&P, but this is what we're heading into, distribution. I don't believe the markets are just going to roll over and turn into a downtrend. And if they do, we have a contingency plan for that. We have a way to recognize it. And it's going to look a lot like what we already have in XLI. And that means that we have a requisite number of red grab candles and the structure went bearish. Now you'll notice we're not just collapsing yet. Why? Because of this 200. This is going to be huge. And when I was developing the notes and the slides for the second webinar in the class again on the 16th, the first webinar is tomorrow, the 6th at 8 p.m. So you can see what it is I'm going to be teaching you all on the 16th. I never thought that, oh, we're going to have to start talking about very specific patterns on the weekly chart and on the daily. You know, I normally don't talk about longer duration weekly, but it's in play. because a lot of weeklies are still in uptrends. So there are levels on the daily and the weekly that are going to be important. By the way, if you took my day trading class, you knew there were levels in the daily and weekly that are important to day traders. Well, they're important to daily time frame traders too. And so when you think about how you can build your trading day by day trading in the morning, I'll talk about our day trades in the premium video, and then by looking at the end of day in the afternoon, you'll see this class is really the bookend to my day trading class, and they feed each other. All right, so I'm really looking forward to seeing you tomorrow. This is how we're going to handle the market. Let's not panic quite yet. Is it time to short the rips? I gave you a scenario and the zone from which you can look for those. And we'll keep talking about this until either the downtrend organizes like an XLI, or we end up in a prolonged distribution chop like an RTY. These are the two scenarios, and we can trade both. It's just that the transition is tricky. All right, so be aware of that. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.